Hello, traders. A very good morning, good afternoon, wherever you are. It is Isma, as usual, again back from FX Kampala. So specifically for today's video, we're going to be looking at footprints. I believe so many of you realize that it is hard for you to get a simple, easier video that you can probably always follow, such that you understand and you master footprints. And most of the times when we come to discuss footprints, all what comes to our mind is order flow. So we are more of institution this year, depending on the content that we normally, if you have probably been conscious about the content that we have always been releasing. So we're more of institution, reason being that it's hardly hard for someone to succeed in the business if they probably don't know the tactics, the techniques of those people that hunt them, the people that dominate the market. So we find it that it's hard for, in any field, in any arrangement, it is hard, and literally it's hardly possible for you to succeed in whatsoever that you do. So that's why actually we have decided this year that we focus more onto institution. And by me coming out to give you videos to do with liquidity, teaching footprints, order flows, order blocks, SMC, literally I want to overcome that challenge whereby we are less informed, we as retail traders, with regards to the forex trading market. So our topic here today is basically footprints, how we can use them in our chart interpretation, and how they can rather help us better execute and succeed in the forex trading market. So if it's your first time to hear footprints, then you should actually like, share, and subscribe to our YouTube video or to our YouTube channels, or you can also go onto other social media platforms of ours, that is Facebook, Instagram, TikTok, LinkedIn, and a lot more, such that you do not miss out on the content that we normally release for you guys to learn and master, to succeed, to change your lives and the lives of those people that are around you. So without any wastage of time, I'll go directly onto footprints. A footprint chart, footprints are usually charts just like the way we see candlesticks. The only difference with footprints is that for them, they can show you the number of orders that probably contributed to any movement that we see. If generally we happen to find a candlestick being bullish or dominated by the buyers, the chart of footprints will basically show to you the contributors of that particular movement in the market. That's why it's mainly important, and you find that this kind of chart arrangement is normally seen in future markets. I will also dedicate a particular time where I will come and elaborate and teach you the major differences between the forex trading market and the future markets, and a lot more, the similarities, the differences, and a lot more that has to do with features and what it takes for one to trade features, and which of the two instruments approaches is actually profitable than the other. So we shall have a particular session where we will have that in particular. However, let's come back to our footprints. Footprints charts actually generally show to us buyers versus sellers in the market at each price, just as I actually told to you, where volume is aggressive and where institutions are observing or are absorbing or push prices. So generally, the act of liquidation, this time around we call it absorption. So the institutions have a tendency of absorbing. So with the help of footprints, charts, you can ideally tell that along this particular point, we have an absorptional point. Therefore, you know what to do better. That is, if you finish this particular video, you'll always be in position to know what to do next, and of course trade respectively in the trading market. So in simpler term, or in simple term, when you talk of footprints, footprints show who caused the movement, whereas candlesticks only show to us what happened. You get the difference? So candlesticks will only show to you what happened in the charts, okay? Whereas footprints will show to you who caused that particular move in the market. You see now the difference. That they are both charts in the market, as we can see. I'll have a simple, I'll show you something. I'll show you a picture. I'll show you a simple brief of how footprints are in the forex trading market. And generally, this can only, be found in different platforms like the Ninja Trader platform. We have quite a number of platforms where we can find them. However, even on TV, that is on TradingView, you can find it. So literally, what you see here on the chart, this is a candlestick, and generally we can see it's contributed, generally or dominated by the buyers, which is the bullish candlestick rather. For what? This is the footprint. The footprint will show to you the bid, these are the sellers, and the ask, these are the buyers. So you can see the number of orders and who contributed to each particular movement at a particular point. Then along this particular point in the middle, we can see it's a point of control. It's a point of control. And generally, you're going to see that they are buyers. There are buyers that are more, or we are experiencing more buying orders as compared to the selling orders. Then we shall also further go and see the delta absorption. I've talked of absorption, and then also the instant delta break. We shall see a lot more of this because I want to make this video more practical, but of course more educative and easier for you to interpret. So when we talk of delta, most people get confused because in the first place, when you come to your trading view, let me get my trading view. If I decide that I'm actually going to, you go to trading view, let me maximize it. So if you decide to use trading view, and this time around you have decided to use the print screens, the footprints rather, you just come to indicators, okay? And I will highly recommend that you use an indicator called the footprint layout that shows the bid and ask. So once you actually come and put it there, I already have it, it will reflect information like this, that of a sort that I've just elaborated and showed to you, where we have the bid and the ask and a lot more. When it comes, yours may not generally reflect like what you see on the chart, that of mine. Yours may actually show you simply the delta. And to change it, you just come on the display, that is on the setting of the footprint. You can just come here and choose. By default, it comes with delta. And delta is generally the difference between the buyers and the sellers. So if you subtract the number of buyers and the sellers, actually the sellers from the buyers, then you can probably, what you get is generally the footprint. So if you get a negative, then just know it's a sell. We're experiencing sellers. The sellers are in control of the market. If you get a positive, it means that the buyers are in control of the market. So I actually advise that you choose the bid and ask, and then it will automatically change here, and you'll be in position to see that. After knowing that, our strategy is very simple. What you literally need to do is to observe and identify your areas of interest, or where you're experiencing equal highs, equal lows. So what you see on the chart here, let me first hide the print screen. So when you come here, you realize that I have equal highs, equal lows, but initially, the time I drafted these levels, there were no liquidation along this particular point. But after identifying your areas of interest, that is the support and resistance, equal highs, equal lows, because if you've gone through our previous video, you realize that we have taught you actually how to identify liquidity in the market, and always liquidity lies above equal highs and equal lows. So if it is up, we can say the liquidity is, we have the buy side liquidity here. And if it's at the support, we have all equal lows. We have sell side liquidity, SSL and BSL. Now, when it comes here, our point here is generally to look at the absorption. I've already explained to you what absorption is, and generally absorption is a situation whereby along your equal highs, or literally where there is the particular area of interest, you can see with your footprint that along that particular point, you're experiencing so many of participants that can probably be buyers or sellers. So along here, you literally can see that you have so many buyers, and you expect them to at least push a particular candle at a distance far, right? But instead, they are not doing what is expected of them. So if there are probably, let's say, 300 of them around this particular candle, where there is this particular candle, so you expect that at least they contribute to a very big uh, volatile, okay, highly volatile candlestick. But instead, they are literally contributing nothing. So once such a thing happens along a resistance or along a support, then expect that there is absorption along that particular point. That's where we normally say we are experiencing gold. That's where there is money. That's where there is the point of liquidity. Now, once a thing happens, or once such a thing happens, then this means that, trust me, the buyers are being absorbed and therefore being liquidated. And therefore, it means that it's a point where we now experiencing sale. Okay, so it means that the smart money are there. That is the first thing. Two, they are absorbing, they are liquidating the people that are likely to be buying here. Their stop orders, all their stop orders, that is the stop loss and the buy stop. So if it is down, all their stop orders, that is the sell stop and also the stop loss. So once such a thing happens, we definitely, along this particular point, we look forward selling. Let me put them back now, and you see what I'm trying to tell you around this particular point. So you see here that, let me put it slightly down. You see there is so many orders, here, especially the buy orders. There are so many of them, 200 or something. This is too much, and their contribution, upwards is a bit low, yet it would be more than this. So what happens here is absorption, and the likelihood here is expected now to come down. So once you probably see this, be patient and wait for the market to probably finish the liquidation that is along this particular point for you to generally look forward selling. And that's why we're now expecting that this market is actually generally coming down because of that. The strategy is as simple as that. However, it works only with Euro futures, Pound future, Australian future, Japanese future, and a lot more. So that is Euro USD, GBP USD are the most prominent ones, are the ones that I can probably recommend one to trade if they're using footprints or order flows when they are trading in the market. So this is now advanced trading, and I believe by you doing so, you realize that now there is a lot much more that you did not know in the beginning, but because of this, you realize that your rate of profitability is increasing and therefore having an edge over the market at the end of the day. So it's not just about perfection, it's actually being informed and having a lot of knowledge. Through the much knowledge, you can therefore make decisions that are better than expected. With the regards to footprints, I think it's now very clear. In any case, you find any hardship, any hindrances, any barriers to do with footprints, please, I'll share our contact in the video. Don't hesitate to reach out to us. Those also interested for mentorship, please also come through. We'll be in position to help you here and there to succeed and also make Forex your business and the business of your future. With the regards to time, I would love to stop from here. As for my God and my country, have a lovely day. Enjoy. Thank you.